What if the magic number to retire by 2030 wasn't $1 million or even 2 million? What if it was 0.21 Bitcoin? I know how that sounds. It sounds completely insane, almost irresponsible. But take a look around. The old financial rulebook, the one our parents and their advisors swear by, isn't just bent, it's broken. They tell you to work for 40 years, save diligently, and trust the system. But what if that system is no longer designed for you to win? What if their entire game is rigged against your success? In this video, we are going to tear apart the conventional wisdom. We will break down the real numbers, look at serious research from Wall Street analysts, and lay out the exact strategy that could transform this seemingly tiny amount of Bitcoin into your ticket out of the 9-to-5 grind. This isn't a video about hopium or wishful thinking. This is a deep dive into data, probabilities, and a new way of thinking about wealth. So buckle up, because the math we're about to explore might just change your entire future. For generations, the path to a comfortable retirement was laid out like a predictable roadmap. Graduate, get a good job, work for 40 years, diligently save 15% of your paycheck in a 401k, and then one day, you get to unplug and enjoy your golden years. For millions of people today, that dream is dissolving into a fantasy. The very foundation of that century-old system is cracking under the immense weight of a single silent force. Inflation remains a persistent challenge, quietly eroding the value of your savings. This isn't an accident, it's a feature of the current financial system. Central banks around the world are printing trillions of dollars out of thin air to service debt and prop up the economy. With every new dollar they create, the value of the dollars in your savings account, your retirement fund, and your wallet diminishes. You feel it every single day. You see it in the grocery bill that climbs higher each month, at the gas pump where prices feel punishing, and in the housing market that has priced out an entire generation. The goalposts for a secure retirement are not just moving, they are sprinting away from you. You're working harder, you're saving more, but you feel like you're running on a treadmill, perpetually falling behind. You are playing a game where the rules are constantly changing to your disadvantage. When a game is rigged, the only winning move is to stop playing and find a new one. It's time to look for a system that isn't designed to bleed you dry. This is where Bitcoin enters the conversation, not as a speculative gamble, but as a potential escape hatch from a fundamentally broken system. To understand its power, you have to understand what makes it completely different from any asset that has come before it. First and most importantly is its absolute scarcity. There will only ever be 21 million Bitcoin, ever. This isn't a promise or a corporate mission statement. It is a law written into the core of its code, enforced by a decentralized global network that no single person, corporation, or government can control. Compare this to the US dollar, which can be printed into infinity, or even gold, which we call scarce. Yet we don't know how much is truly in the Earth's crust, and we get better at mining it every year. Bitcoin's scarcity is mathematically perfect and verifiable by anyone. This makes it the hardest, most sound asset in human history. Second, its supply issuance is perfectly predictable and transparent. Every 10 minutes, a new block of transactions is added to the blockchain, and a fixed number of new Bitcoins are created. Crucially, every 4 years, an event called the halving occurs, which automatically cuts the amount of new Bitcoin created in half. We've already been through several of these halvings. Basic economics tells you everything you need to know. When a rising, insatiable demand meets a transparently shrinking supply, the price has only one direction to go over the long term: up. Finally, we are witnessing an explosion of global adoption. This is no longer a niche interest for tech enthusiasts. The biggest names on Wall Street, financial giants like BlackRock and Fidelity, are now offering Bitcoin products to their clients, legitimizing it as a portfolio asset. Major corporations are adding Bitcoin to their balance sheets as a hedge against inflation. And entire countries like El Salvador are making it legal tender, proving its use case on a national scale. This isn't a fad. It's a fundamental global reset, and the smart money is positioning itself accordingly. So, how can a sliver of a Bitcoin, I could just 0.21 BTC, realistically be enough to build a retirement fund by 2030? Let's ground this in a real-world scenario. Let's assume you recognize the trend and acquired your 0.21 BTC for a total investment of around $18,500 in late 2025. Now, let's set aside the hype and look at where serious, data-driven analysts project the price of a single Bitcoin could be by the year 2030. A comprehensive panel of industry specialists surveyed by Finder produced an average forecast for Bitcoin's 2030 price, based on late 2025 analyses, though keep in mind markets can change rapidly. That number is $391,794 per coin. In this scenario, your 0.21 BTC would be worth approximately $82,300, a nearly 4.5x return in 5 years. Next, we look at ARK Invest, a major Wall Street asset manager known for its deep research into disruptive technologies. Their realistic base case projection for Bitcoin, fueled by institutional adoption, is $710,000 for one Bitcoin by 2030. Again, based on trends up to late 2025, with markets always subject to shifts. In this case, your 0.21 Bitcoin would transform into over $149,000. Now for the scenario that shows the true explosive potential. Arkai Invest's optimistic bull case, which models for wider nation-state adoption and Bitcoin capturing a significant portion of the global asset base. Projects one Bitcoin could reach $1.2 million by 2030, though remember, these forecasts can evolve quickly. Your 0.21 BTC, acquired for $18.5 thousand, would now be worth $252,000. Let that sink in. An investment of under $18,500 turning into over $250,000 in just 5 years represents an asymmetric bet. Asymmetric means your potential downside is limited to your initial investment, but your potential upside is exponentially higher. You simply cannot find that kind of opportunity in the traditional stock market or real estate. So you've reached 2030, and your Bitcoin is now a significant nest egg. You might have $82,000, $149,000, or in the bull case, $252,000. How in the world do you live on that? You don't just cash it all out. Instead, we use a classic wealth preservation strategy borrowed from traditional finance, the 4% safe withdrawal rate. This rule, based on a famous study called the Trinity Study, suggests that you can withdraw 4% of your portfolio's value each year, with a very high probability of it lasting for at least 30 years. Let's apply that 4% rule to our 3 scenarios. Scenario 1, $82,300 portfolio. 4% gives you $3,292 a year, which is about $274 a month. Scenario 2, $149,000 portfolio. 4% gives you $5,960 a year, or about $497 a month. Bull case scenario 3, $252,000 portfolio. 4% gives you $10,080 a year, or $840 a month. I know exactly what you're thinking. $840 a month? I can't even pay rent with that in most American cities. And you are absolutely right. If you plan to stay in a high-cost city like New York, Los Angeles, or London, this strategy falls apart. But this is where the ultimate life hack comes into play: geographic arbitrage. The principle is simple. You earn your wealth in a high-value system, the global Bitcoin network, and spend it in a low-cost environment. You move from a place where your money buys you stress and a tiny apartment to a place where that same money makes you a king. There are dozens of incredible countries where you can live an amazing, vibrant, and fulfilling life for $1,500 a month or even less. Imagine living in a beachfront community in Portugal, a mountain town in Colombia, or a bustling city in Thailand. In our bull case scenario, your passive Bitcoin income of $840 a month covers the majority, if not all, of your core living expenses. Your freedom isn't bought with millions of dollars, it's bought with intelligence and flexibility. If this breakdown is opening your mind to a new set of possibilities, and if you're tired of the same old failing advice, then do yourself a favor and smash that subscribe button. I want you in this community as we explore these ideas every single week. Let's navigate this new world together. Now, before you go all in, I need to be 100% real with you. This strategy is not risk-free. Far from it. Bitcoin is an extremely volatile asset. We have seen gut-wrenching 80% crashes in the past, and we will absolutely see them again. You must be mentally and financially prepared for that level of volatility. If seeing your portfolio drop by 50% in a month would cause you to panic sell, this game is not for you. First, it would be incredibly reckless for anyone to put 100% of their net worth into Bitcoin. This is not about betting the farm. For most people, a 5 to 20% allocation of your total investment portfolio to Bitcoin is a much smarter play. Think of it as the high-growth engine of your portfolio. It gives you meaningful exposure to the massive upside potential while protecting your downside with safer, more traditional assets. Second, you can't just blindly follow the 4% rule. You must use an adaptive withdrawal strategy. The reality of a volatile asset is that your portfolio's value will fluctuate wildly. In bull market years when the price is high, you might take out 5% or even 6%. But in brutal bear market years, you must have the discipline to tighten your belt and withdraw less, maybe only 2% or 3%, to avoid being forced to sell your precious BTC at the absolute bottom of the market. Finally, there are regulatory risks. Governments are unpredictable. They could try to implement hostile taxes or create regulations that make it difficult to use Bitcoin. This uncertainty is a real risk, and part of the price of admission for being involved in a technology that is fundamentally challenging the global power structure. This video is a thought experiment designed to open your mind, not a certificate of guarantee. It is not financial advice. It is about understanding how to take a calculated, intelligent risk to reclaim your time and your life. The old retirement advice handed down from our parents and grandparents is failing an entire generation. The idea of grinding away for 40 years, saving a currency that is actively being printed into oblivion, is a broken plan from a bygone era. It's a path that leads to disappointment for an increasing number of people. What we have talked about today is a different path. It's a path that leverages superior technology, verifiable scarcity, and a global, open-source financial network to potentially fast-forward your financial freedom. The idea that just 0.21 Bitcoin could become a viable retirement fund by 2030 isn't just about a price prediction. It's a powerful illustration that you don't necessarily need to be a millionaire to escape the rat race. You just need an asymmetric bet on a system that is fair, transparent, and can't be manipulated by the powers that be. This is not a guarantee, it's a possibility. It is a story of hope and empowerment for anyone who feels that the traditional path is a dead end. It's a blueprint for thinking differently. So, I have one final question for you. What's your Bitcoin stacking goal? What's the number that you believe will change your life? Let me know in the comments below. Thanks for watching.